All right. Feet off the desk, close out those emails, get the heck out of those chat rooms. We got some work to do here tonight. It's about that time of day again here, folks. It's Tuesday evening. It's June the 25th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, don't forget, guys, I help traders find high quality, reliable, dependable, usually profitable trade setups using a very simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little different. I have a very important job tonight. Tonight, we're going to prep the charts, find the best levels, the best setups, the best opportunities that we're waiting for tomorrow morning. That's Wednesday's trading session. And tonight, we got all kinds of stuff to talk about tonight. We'll talk about the calendar for tomorrow. That way you know when the major news events are going to be. Then we'll open up those charts. We'll grab oil, S&P, Nasdaq, gold, and euro. We have a ton to talk about here as we go into the end of the week, end of the month, end of the quarter. I'm going to jump into oil here first tonight because that black gold just took off in the wake of the API report this afternoon, and we have a very, very significant clue in that strong bull spike. It tells us pretty much everything we need to know for tomorrow morning, and let's put a plan together here tonight on that crude oil. Jumping into oil here right now, you can easily see we are bullish on oil, but uber bullish in the last few minutes here. We know we're bullish. We want to buy at a support level, and then we get this big guy, this big spike right into the close. Every Tuesday afternoon at 4:30 Eastern Time, we get some major news regarding oil, and this time around, that major news sent this market running higher. Now, anytime I see a strong spike, especially into the close like this, I always know there's really 4 potential scenarios that I need to be prepared for, right? What if it goes up? What if it goes down? What if it goes sideways? We're going to break all of those different situations in play tomorrow. We're going to break those into a lot more detail. Very, very important if you're an oil trader right now. I've got 4 different scenarios to prep for. We'll talk about the entry patterns, stuff to avoid, stuff to look for, and we're going to break that down into a lot more detail here tonight on this video. Over on the S&P here tonight, S&P is pretty much the exact opposite as the oil market right now. 1, 2, 3, 4 legs down here on the S&P. We'll go into a lot more detail of why this happened right in tonight's video. But most important thing, anytime I have a market that goes 4 legs down, I have a very, very specific plan here for tomorrow. I've got a very specific plan for a 4-leg down market. We know we're bearish. I want to be a seller as the market goes higher. I'd like to be a buyer as the market goes lower, but I'm also keeping an eye out because anytime we see a 4-leg down move, I'm always open for a short covering rally. We'll talk about what a reversal looks like. We'll talk about when it's safe to trade a reversal, and I'm also going to show you how to capitalize on all the rookies that are trying to predict a reversal. You don't want to predict that reversal right now on the S&P. I'm going to break down all of the plan here for the Emini in tonight's video newsletter. And of course, the Nasdaq, same thing here on the Nasdaq. 1, 2, 3, 4 legs down. We are 4 legs down on the Nasdaq. You can already see, though, what the Nasdaq's telling us, right? The Nasdaq is playing with cards up right now. We know what the Nasdaq's thinking. It's probably what we're going to get on the S&P as well. But for now, though, what do we know? It's a bear market into a trading range. That tells me I want to sell high. That tells me I want to buy low. Those are very different strategies, buying and selling right now. It also tells me to keep my eyes, because anytime I see this much move in one session, I always know there's potential. This could get the string pulled and go right back up where we came from. You can't predict that, though. You've got to wait for a couple key components. I'm going to talk about how to be looking for that reversal and when to pull the trigger on that buy if we get it right for the Nasdaq tomorrow morning. Make sure you stay tuned to the Nasdaq if you're an NQ trader like we are in our trade room. Over on the gold tonight, gold makes that nice strong run higher and then, of course, goes sideways. We talked about about this last night. We're expecting to see a bit of a range-bound market. It's a bull market into a sideways trading range. Anytime I have a range-bound market, I always want to buy low, sell high, and avoid the middle. So as you can see here, we've got this big shot lower. Now, what do we always talk about? Anytime we see a strong move in one direction, what do we typically see? We typically get a second leg, and I'm anticipating that second leg coming so I can buy it for that move going back up into that trading range. I also have to have a plan here right now if the market keeps going higher, because I don't want to trade in the middle. So don't chase after it if it goes higher. I'm going to give you a great plan of attack. If it does make a run higher, we'll talk about how to buy it, how to avoid some of the pitfalls in the middle, and then who knows, we might be finding a chance to sell this market later on in the session tomorrow morning. We'll talk about buying pullbacks, avoiding those common losses in the middle, and we'll also talk about selling off that high in tonight's video. And then, of course, last but not least here, over on the euro, as we mentioned in last night's newsletter, was bullish into a trading range. What a great example today, by the way, of why you don't want to trade too close to that trading range. That was a great example of a seller failure that was just too close to that range. We'll talk more about that in tonight's video, of course. But now, what do we have? Bull market into a trading range. I want to buy low right now, but there's two big things in my way, right? I got the trend line, and just like gold, I have that strong move down. We know that strong move down tells us we're going to probably see a second leg. I'll give you a hint over tonight. That trend line right there, that trend line is going to be our biggest resource. It could also be the biggest headache for those buyers tomorrow as well. I'm going to talk about how to be a buyer on this market. I do it safely right now. Also, I'll talk about what it means to be a seller, because another leg lower isn't a guarantee this market turns around and goes bearish. Very delicate to be a seller right now because of how the bulls responded to that big move down. I want to be a buyer. I want to go back up into that trading range high tomorrow. I do need to use this trend line, though, to do that, and I'll also keep my eyes open for if we make a run lower. At what point can I safely start looking to sell this market on the euro? We're going to dig into all those details tonight in this mighty nightly newsletter. Got the euro, got the gold, the Nasdaq, the S&P, crude oil. I'm here, you're here, we are ready to party, and as always, it is great to be here with you guys every evening on this newsletter. But I got some work for you, though. I got a couple of things I want to remind you about here tonight. First of all, right before I publish this video on our YouTube channel, I always hit the send button on an email out to everybody on our mailing list. Those people always get the first heads up whenever this video goes live, and I want to make sure you get that email every evening so you know when this newsletter goes live as well. To join the mailing list, it's very easy. Just go right to the blog here at Sideways Markets. There's also a form on the homepage of our main website at School of Trade, and all I need is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe to our list, your job is not over yet. Make sure you check your email, because I'm going to send you a welcome email, and in that welcome email there'll be a verification link so you can approve, right, that for me to keep sending you emails every evening, and there'll be a bunch of great resources in there so you and I can get the most out of our time together on this nightly newsletter. So once again, make sure you never miss another great video newsletter by joining our mailing list. And when you join the mailing list, make sure you check your inbox. And remember, sometimes those welcome emails, sometimes they get stuck in your spam filter. So if you don't see the welcome email, check your spam, your junk, your promotions tab, whatever various, inbox, subfolders they use these days, because sometimes those emails do get flagged as spam. And then one last thing before we jump in, guys, I need your help. I'm always trying to make this video newsletter the very best place to learn and earn every evening on YouTube. And as always, I'm asking for your feedback. More importantly tonight, I want to know, in your opinion, what's the biggest obstacle for a new trader, right? Is it money? Is it technology? Is it strategy? Is it mindset? In your experience, whether you've been trading for 6 months, 6 years, 6 decades, I don't care. But in your experience, right, up until this point, what do you think is the biggest obstacle standing between a rookie trader and someone who's confident and consistently profitable, right? Is it the right software? Is it the right strategy, the right setups, the right trade management? How about psychology? What do you think is the most important part of the learning process? Drop me some comments in the comment section below. I'm always trying to add more value to this video, and based on your feedback, I'll continue, right, to keep making positive improvements on this video newsletter. And if you want to tell me that feedback in person, don't be afraid to call that toll-free phone number in the upper right-hand corner. Now, I'm going to date myself right now. I realize this, right? I'm kind of old school. I actually talk on the telephone. I realize it's not really in vogue these days. Most people are glued to their text messages these days, but I'll tell you right now, when that phone rings in the office, I actually pick up the phone, talk to my clients. I love talking to you guys. I love answering questions about the best brokers, charting software, data providers, right? How much you should be paying for commissions, the best types of strategies, our favorite markets, any questions you have right now, or maybe you want help with our free trading classes, or you want to get access on a free pass to our trade room. Pick up the phone, call that toll-free phone number. I am always here. I promise I'm not going to ship you overseas and send you into some call center somewhere. I promise, right? You'll be right here with us at the corporate headquarters in Los Angeles. I can't wait to speak with you and answer all your questions. So call that toll-free phone number. Drop me some comments in the comment section. And oh, one more thing, guys. If you tune in every evening on this newsletter, give me a thumbs up on the YouTube video right now, because I'll tell you right now, every time you hit that thumbs up button, it helps me expose this video to other great traders who we know could use this information as well. So help everybody out. Give me the thumbs up on the video if you tune in every evening, right? And let's get to work here this evening, because we have some work to do for tomorrow's trading session. Tomorrow is Wednesday morning, hump day, the 26th. What are we dealing with tomorrow? What's on the schedule here for tomorrow? Well, remember, we're going into kind of the bee's nest here right now. The last few drops of the month of June. We talked about this last night. We've got the end of the week, the end of the month, and the end of the quarter, all coming right around the corner. In case you missed last night's newsletter, that means volatility, right? With a capital volatility, right? It is a lot of volatility we expect as we go into the end of the week, end of the month, and end of the quarter. Everybody is watching the charts right now as we go into the rest of this week. Now, speaking about the rest of the week, as you may have heard, right, the G20 summit is on Friday. Now, that is ultimately what's causing a lot of the back and forth in these markets right now, because as of last night, it was Trump and Xi meeting will happen in G20. As of right now, recording this video, it's nope, they're not going to meet, they're not going to do anything. So we're going to keep probably seeing this soap opera back and forth, and oh my goodness, and then oh my goodness, and so there's going to be a little drama here over the next couple days, I would imagine, in the lead up, right, to that big G20 summit on Friday. And to make this very clear, the G20 summit is really irrelevant to the markets. The only thing that is relevant to these markets right now is who's going to potentially be rubbing elbows together, and that is the leader of the U.S., the leader of China, right? Two really big economies who have been flexing their muscles recently back and forth, right? Whether it be in, newspapers and television, right? YouTube videos, or on Twitter, of course, about, right, whose economy is bigger, so to speak, right? So we know that back and forth is part of this. That will continue to play into tomorrow. Those are kind of some of the unscheduled stuff that we're watching here for tomorrow as well. We also, of course, don't forget, we also have the kind of tensions building in the Middle East right now. We continue to hear back and forth between the U.S. and Iran. The U.S., of course, trying to impose additional sanctions. Iranians are coming back and saying, heck with you, not obviously in those words, but Right, that's the back and forth right now. Those tensions are causing concern about supply of oil. By the way, there is no real issue with supply of oil. The world is swimming in crude oil these days. That's why price has been so low for so long. But these tensions, even though they're probably fluffed up and even though there probably isn't any real reason to be worried about this stuff, right, we do know they are causing this oil market right now to keep catching a bid every time it pulls back. So, you're trying to sell oil right now. I hate to burst your bubble, but might not be the right time fundamentally in the world we currently live in to try to be shorting this oil market. We know we have that pressure as well. So really three big things, right? You got the end of the week, end of the month, end of the quarter volatility. You've got the soap opera and the drama, right, that is developing between the U.S. and China trade negotiations, head of G20, and of course, right, we got the tensions building in the Middle East with the sanctions in Iran, and of course, everybody kind of getting all fluffed up there, right, in the issue of possibly supply and demand concerns on oil. Those are all the unscheduled news reports and kind of the themes that are running through these markets right now. What do we actually know is on the schedule for tomorrow? That's a good question. Well, first of all, we get some big news tomorrow, as you can see. We get some durable good orders. We got some international trade tomorrow at 8:30. That will hopefully be a welcome shot in the arm early in the session. And then, of course, how could we forget, tomorrow is that weekly inventory report for all you crude oil traders. Now, the first news report this morning, the durable goods and the international trade, it's a pretty big deal. It's not the biggest news of the week. The biggest news of the week will probably be on Friday morning with that personal income and personal outlays. But this will be the biggest news tomorrow for most of these markets. Again, pending any Twitter storm or pending any, right, announcements from Iran, right? That is the kind of the biggest meat and potatoes news tomorrow, which is good for us. We'll be there bright and early tomorrow morning at the opening bell. So we have a front row seat for that. Don't forget, we open up our trade room every morning at 8 o'clock Eastern time, so we'll have a front row seat for that tomorrow morning. So that's pretty easy tomorrow. The big deal, though, you've got to kind of work around tomorrow is that petroleum status report, or as an oil traders know, this is the weekly inventory report tomorrow morning at 10:30 Eastern time. Now, just in case this is the first time you're watching a video by me here on a Wednesday or a Tuesday evening, my cutoff, right, around that petroleum status report is around 10 a.m. on Wednesday mornings, right? And I know what you're thinking right now. Why do you cut it off so early ahead of that 10:30 news? Well, you'll see tomorrow morning, because usually the market gets really, really quiet. And when it gets really slow and real sluggish like that, it becomes very unreliable to trade. And then I like to give it about 15 minutes after that news comes out, let the dust settle, right? Figure out what direction they want to go in. It's much more reliable that way. You're more than welcome to try to trade the actual news report, but in my experience, and I've worked with thousands of traders in almost 15 years of doing this, I have yet to see anybody who consistently can make profit off of that weekly inventory report. Yeah, I get a bunch of emails every week about, see, Joe, I made some money in the report, but try to make money every Wednesday. It's very, very difficult. It's like getting lucky at the casino, in Vegas every single time you go. Probably not going to happen. I'm sure there are a couple people out there that got hit with a lucky stick when they were born, but most people are going to have difficult times consistently and routinely making money off news events. My best recommendation and my strategy is to sit on hands from 10 a.m. to about 10:45 if you're an oil trader. And that really puts you in a spot right after that, right, 10:45. You've only got about a half an hour, 45 minutes until we start to roll into lunch. And then, of course, you want to pick it up after 12:30 for the rest of the session on oil. We'll talk more about that tomorrow morning in our trade room. But for the most part right now, though, be aware tomorrow. Big news at 8:30. Big news at 10:30. Make sure you trade carefully after 10 o'clock if you're an oil trader. And as always, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we will have a front row seat for all of this good stuff, right? Anticipating, of course, more news from the Middle East, more news out of the U.S. and China. And of course, continuing to see more of this volatility as we go into the end of the week, end of the month. Let's start off here tonight with some charts now. We got a lot to cover here tonight. Crude oil, S&P, Nasdaq, gold, euro. Let's start off with oil here first of all. What do we know about oil right now? We know oil is bullish, and we know it has a very strong spike higher. Now, usually when we see a spike higher, we see one of four different scenarios here. Before I jump into all four of those scenarios, though, I just want to put into perspective where we are here. We have a one leg up, two legs up, and three legs up into a measured move. In a trending market, measured moves are typically the market's objective, where they're trying to go, and this will be considered major resistance. Now, you might also notice there's also another measured move up there. This is coming from much earlier, and we talked about this last night on the newsletter. We've got another 1, 2, and 3 legs up right here. So it's definitely a major resistance area up here at that 59. In fact, we were anticipating 59 in last night's newsletter. And of course, at this point now, and this doesn't come to a shock to most people, but we definitely could be looking at a run up to 60 towards the end of this week. As I mentioned earlier, this is a level of resistance, but with all the tensions happening in the Middle East right now, I've been trading oil a very, very long time, and anytime we hear about any type of tension in the Middle East, oil loves to go right back up again and keep on pounding higher. So I'd be very, very careful trying to fade these highs right now, and really anything that pulls back right now, it looks like it's going to continue to be a buying opportunity. So the bottom line is we know we're bullish. We also know we're sitting at some major resistance. We're also, of course, at the top of this channel, but I don't think that channel is going to last very much longer here. Hopefully it does, but here's what I usually see after these big, strong spikes. Anytime we see a strong spike like this, we typically see one of four scenarios. One is going to be a spike and channel. Spike and channels are very, very common when you see a spike up. Second one is going to be a spike into a range, a spike in range. These two are what I would anticipate for tomorrow. So number 3 is a flag pattern, We saw one of these on the S&P today, Flag pattern, strong spike up in a bear channel coming down. You can see difference there between these two, examples. They are very different, and we'll talk more about them in a moment here. And what was the third one? Sorry, the fourth one? The fourth one is a failure, The fourth one is a failure. We run up, and we try once, we try twice, and we fail back down. Failure patterns, of course, will result in a 1, 2, 3 reversal, Reversal pattern, We may go up and we may tumble right back down again. These are 4 scenarios that I need to be ready for tomorrow. Now, first of all, number 1, That number 1, what's the best way to trade it? Mark up the deepest part of the pullback, part of that channel, and buy the trap. Okay, that's the best way to trade number 1. What about number 2? Number 2 is that spike in range. Spike in range, take the size of that range, create a level of support, and look to buy that level of support. We'll talk a lot more about that here in a moment. Buying low. What about number 3? Number 3 is the flag pattern. How do you trade a flag pattern? Very carefully. See, there's those jokes again coming in. I better not quit my day job, as a trader. Flag pattern, buy that breakout pullback up above that, up above that high. And then what, number 4? Number 4 is that reversal. Number 4 is a 1, 2, 3, 1, 2, 3, back down, mark up that low, mark up that high, mark up that high, and we're selling off the high of that channel. 4 different scenarios for tomorrow. I'll give you a chance to grab screenshots on this. Don't forget, you can always pause the video, grab a screenshot, put that in your trading journal. First one is that spike in channel pattern, Buy that low. Second one is a spike in range. Buy that low. Third one is the flag. Don't forget, up and over, That breakout pullback. And of course, number 4 is that complete collapse. Not likely, but definitely possible. And so we definitely need to be ready for all 4 of these scenarios. Again, pause the video, grab your screenshots, and let's get back to our chart. Now, let's get a little bit of this stuff off here real quick. I'll bring it back here once we're done. But let's get rid of that real quick here. And let's kind of clean this thing up here a little bit so you can kind of get an idea for, right, where we are here. Let's get that off there. I'll put those back, right, once we're done. Okay, so zooming in right now, forget about this. We'll worry about that later on. Big, strong spike up. The most common thing after a spike up is usually going to be a spike in channel. Spike in channels are pretty easy because what will happen is the market will pull back and immediately make a higher high, right? So once you see this market pull back and immediately now make that higher high, just draw that trend line across the high. Now bring it down to that low, and that creates your channel. Now, the rule of three is very powerful with this, which means if you get to it early enough, right, it's 1 buy off the low, 2 buy off the low. That counts now as 1, 2, and 3. Okay, so if you're in Asia, if you're early in London, if you're early to this move, right, you've got a couple buy opportunities here off the low of that channel. The big money, though, is made by waiting for the deep pullback. Now, watch where I draw these lines here. It's the base of the channel and the first pullback. This is the buy zone, right? That's the buy zone when it comes to a spike in channel. What I'm looking for is I'm looking to buy that pullback, and that pullback usually ends up setting up as what I call a failure pullback combination. So imagine we run lower, the moving average now comes over, the sellers think the market's bearish and they're trying to sell back down into that range. The bears now try to sell it. We know where their stops are, and I can buy into those stops. I can buy a pullback to the moving average. Again, that's why I call this the failure into pullback combination. One of my favorite ways to trade a spike in channel is to wait for that deep pullback. That deep pullback that comes a couple hours after that spike usually sets up for a seller failure pattern into a buyer pullback and a retest of that high. What about a range bound market, right? A range, strong move up, a range will pull back and then double top. So that's the easiest way for a range, right? If you see a double top at the high, you know, kind of this back here, right? Strong move up, pulls back, double tops, and comes over, right? That would be a top. That would be your bottom. And just like they bought, you want to buy the low of that range. So strong move up, right? Pull back, double top, and back. Now we can mark up that high. Do this, mark up that high, mark up this low, and once you know where that area is, now you want to buy just below the low of that trading range. And this is where things get fun, because what you're looking for here is you want to see a move lower. That will bring the moving average over. Once again, the sellers will likely think, okay, we're going back down into that range. They try to sell off that pullback. We, of course, know the market is bullish, right? And we're going to buy right into that failure, right? As you can see, whether it's a spike in channel pattern or it's a range structure, we can definitely look for that deep pullback here and buy into the stop losses of those sellers. Now, here's where things get a little bit confusing here. Let's say we go up, big strong spike higher, and then we get a lower high. Ooh, that's not good, right? Now what do? We draw the trend line down off the high. This tells you to flag, okay? Put it back on that low. Now, the key characteristic of a flag pattern is slow, right? You're going to be shocked at how slow this market will chop lower. Okay, don't be fooled by it. A lot of people mistake a flag for a reversal because it is so slow, right? They see it slowly moving back with those lower highs, and they think, oh, clearly the buyers have given up on this. Let's try to sell it. And what happens is they try to sell high, and the buyers will buy right into those stop losses. That's the most reliable way to trade a flag pattern. Does that make sense, right? So it goes up, and then it slowly starts to pull back, right? You'll feel it. It feels like the market's just stuck in quicksand. It'll slowly pull back, and then again, the sellers here will come in, and they'll try to sell this thing short. In fact, I always say, keep an eye out for those sellers entering that trap, because this is where you find the flag failure or the flag continuation. For example, if we hold that pullback, that flag continuation is a beautiful buy right into those stops. But if I see this huge red signal candle coming off of this, right? If I see a big red candle coming off it that closes back underneath that channel, that is almost always a failed flag, and we're going to go right back down into that trading range. Now, again, because we're bullish, you want to err on the side of the buy side, but if we come back and we see those bears come out, and they just smack this thing lower here, that will probably be enough momentum now to run this back down into that trading range. And then remember, there's one more scenario here, and that is that reversal, right? We see the buyers now fail, strong move down, moving average comes over, they hold the pullback, and they run off that moving average. Okay, now keep in mind, at this point, where does that put us? It puts us right back into that trading range. So here's a couple things you want to think of if we do happen to get that move going back down into that trading range. If we do happen to see this market try once, try twice, and run back down into that range now this becomes, right, it will probably end up back into that range and settle back in. If that's the case, now we want to buy off the low of that range here. Look for that move lower. Look for those sellers now to try to sell into it. And you got it. We're buying the low of that range right back up again. So the hard part's going to be if we do get that short coming lower, right? If we do see this market 1, 2, 3 and run lower here, hard part's going to be now you're back in that range. In a range-bound market, you want to buy low, sell high, right? I want to buy low using that 2-try rule we talked about, right, in last night's newsletter. And of course, I can sell high at this point, but because this market is so bullish, I'm looking for a very specific type of sell setup, and that's what we call a nested failure, which is a 1, a 2, and then back down in. Right? So be aware if the market does try to go higher after collapsing back down into that trading range, I want to wait very carefully here. Let the buyers try once, let them try twice. I call this a nested failure pattern, and we'll sell back down into that range from there. Now, couldn't I just sell it right now? How would I sell it right now? How could you get short this market? I don't recommend it, by the way, right? But how could you short it? Crown reversal, strong move up. Let the buyers try once and fail to retest the high. Now, mark up that high and look for a trap high called a crown reversal pattern, right? You may also see this is very similar to a nested failure. But because this move is so strong, I know, we're above this big range here. We're inside the sell zone. The hard part right now, though, is it's a little bit difficult to justify selling this market right now because of what's happening right in the Middle East. So the bottom line is if you do want to try to sell it, strong move up, let those bulls try once. They fail to retest the major high, mark up that swing high, and look for that trap, right, coming in off of that swing high. Again, we call this a crown reversal pattern. So boy, oh boy, we have covered a lot in the first half an hour of this video, right? Spike in channel, spike in range, flag pattern, reversal patterns, crown reversals. Guys, I have so much more I want to share with you, but I got to keep going because we haven't even touched the E-minis yet. Here's what I'll do for you. If you want to learn all the details of how we trade those patterns, get a much deeper dive into those setups, I'll put a link in the upper right-hand corner. I'll also put a big red button right below the video tonight for our free trading course. It's a very, very popular course here at School of Trade. If you're a new trader, or maybe you're just sick and tired of relying on faulty indicators and lagging signals, and you want a strategy that really gives you confidence to become consistently profitable, grab that link in the upper right-hand corner, grab that free trading class, and when you register for the class, not only will you get access to our video course materials, you'll get an invite to join our trade room on your free pass, and hundreds of chart lessons so you can see how those patterns work on a real chart. Don't delay. Grab that link in the upper right-hand corner or hit that big red button below the video tonight on the blog. And don't forget, sometimes those emails, right, I'm going to email you all the access to this. Sometimes those emails emails get stuck in your spam filter, so check your spam, your junk folder, right, and your promotions folder in Gmail if you don't see the email I send you, right, regarding that free course. Let's keep going. How about some S&P right now? As we mentioned, S&P is 4 legs down. Now, 4 legs down is nothing to really joke about. It's a very big move in one day. 1, 2, 3, 4. Most of the time, when a market goes 4 legs down, the foreseeable short term, which would be the overnight session into the early part of tomorrow, is going to go sideways. That's why I have this range kind of drawn out here. That's why I said the Nasdaq is a little bit showing us the cards here on the S&P. The most important thing, though, is be very careful trying to sell this low on the chart. Unless we can see a lot of strength going lower, I really don't feel confident selling at this point in the ball game. What I do want to do, though, is try to sell it high. That is the one thing that I definitely want to look for here, right, on this S&P. And really, there are 4 scenarios that I want to be ready for. 1 is to sell it high. 2 is to get a reversal. 3 is to buy it low. And 4 is to get a breakdown. Let's talk about all 4 of those scenarios. Now, last night on the newsletter, I talked about kind of the secrets behind trading pullbacks, right? And we talked about, right, different types of pullback patterns that we could use. I'm going to use those here on the S&P. First of all, I'm looking for a move higher here right now. And ultimately, I'm looking for something very similar to what we saw here and here. I want to see the market go above the moving average. I want to see buyers try to buy the pullback, and then I'm looking for a chance to sell into those stop losses. Again, I want to see the buyers try to go higher, try to hold the pullback to the moving average, so I can then slip my order in there and sell right below that low. Once again, I'm looking for a way for the market to go up, profit taking. Moving average comes over. The buyers, of course, try to buy that pullback. We'll talk about it if they're successful in that in a moment. And I'm looking to sell back down into that range. Now, this course would be a failure pattern, right? A failure pattern. Now, maybe we get lucky. Maybe we see a 2-legged pullback, right? 2-legged pullbacks are going to be 1 and 2. Draw that trend line up and then use that trend line now as that key level of resistance, right? We call those 2-legged pullbacks or 2 LPs because they result after 2 legs higher, 2-legged pullback. Draw that trend line, use that trend line. And remember, when it comes to a 2-legged pullback, remember, you always want to see some daylight in between the trend line and the deepest part of that pullback, right? That's kind of the trick when it comes to a 2-legged pullback. What you don't want to do is try messing around with something like that, right? Like a grinder. Those grinders are always tricky. If it does grind up, what I'll do is I'll just wait for the pullback to the moving average, drop my order in right below that low, and look for that failure into pullback combination that we talked about, right, on crude oil, right? Failure into pullback combination as we go back down to retest those lows. Now, that's the first scenario that is most likely here for tomorrow, right? How would it reverse, though? What would a reversal look like? A reversal has to first start off with a very strong move against the trend. Next, we pull back to the moving average. The final and most important phase of a 1, 2, 3 reversal is the actual reversal, the strong move now off of that moving average. Now remember, don't be foolish and try to buy that pullback. Okay, look what happened back here. That was a strong move higher, right? That didn't get anywhere. We can't assume that pullback will go because guys like me and possibly people like you, right, are going to wait for that buyer to fail and sell into that failure. If they are successful, though, and we do see that 1, 2, 3 reversal, fine by me. Let's now look for basically one of 2 scenarios. One, because it's a short covering rally. In other words, because this big move down, for whatever reason, right? We might hear from, oh my goodness, something with Iran and the U.S., something good happens. Who knows? This market could just tear and go right back to that range where we came out of yesterday. So there could be a very violent short covering rally here. And so you really want to kind of be ready for both scenarios. So one would be, again, 1, 2, 3. Okay, we get that 1, 2, 3. Now, the aggressive one here is going to be if it jumps, right? If it really jumps off that moving average, look for a 2-try breakout. 1, 2, trap, and long, right? Called a 2-try breakout. I see the market jump. The bears try once, the bears try twice. They're staying in front of a freight train. I don't want to buy high. I want to buy low. It's a trap. This is all about reading the market's personality as it runs off that pullback. Now, another much more reliable setup, or not, maybe not reliable, but a setup that you'll see most often is going to be, again, we see that 1, that 2, and that 3. We jump off the moving average now. Now, mark up that high, mark up that high, down to that low, right? Down to that low, not this low, and now we have our sweet spot. This is obviously the most conservative option, but this is the one that sets up time and time again, and it really is something that you can be confident in trading. So those are 2 scenarios, right? And again, how do you know which is which? It'll all be the personality of the market when it jumps off that moving average. If this thing just starts ripping higher here, then we look for that 2-try breakout. If it just kind of rolls its way higher, wait for that pullback, right? And we'll buy that pullback from there. Great stuff there, right, for the buy going. And again, this could be a very nice move going back up into that trading range. Now, what if we go lower here? Going lower, again, we are 4 legs down. I definitely want to keep an eye open now for a reversal. And the reversal is usually going to be when the market shoots lower. In my experience, after going 4 legs down, usually the market will make one strong move lower and then kind of fizzle out and run back up where it came from. You know, almost like the Bears, right? The Bears made a run for it, realized they were in trouble, and they decided to retreat back into the cave, right, for hibernation, right? It's almost like the Bears, they go whoops, and they go right back into that range. What I want to do is wait for that strong move down, and here's where you look for that same crown reversal pattern, right? It's a bear market, right? So to buy this, we have to look closely. Now, first of all, strong move down. You want to see them really get oversold on this. Then pull back, 1 try for the bears, higher high, 2 try for the bears. And what you're looking for here is with that trend line coming up to create what I call a boxed in scenario. What's going to happen is the sellers will try once to sell. Then the more conservative sellers, they'll try a second time at a higher price. At that point now, though, now there's a trend line coming up. And that trend line acts as bear repellent, as I always, kind of joke around with you guys in this newsletter, right? Nobody's going to want to sell into that trend line, and certainly they're not going to be selling below that trend line. Look for that little punch just below that trend line, nice strong signal candle, and we're buying it back up into that trading range. Promise me, though, you're not going to try to just buy it. Wait for the actual setup, because the setup is first going to give the bears a couple shots, right? Get them exhausted, get them committed to the position. Then right when those bears are susceptible to getting stopped out, we buy right into those stop losses, create that little short covering rally back up into that trading range. So that is the buy off of that low. Now, how do I feel confident being a seller? Remember how I want to be a buyer, right? Got to run it back up. Same thing lower. I've got to see a 1, 2, 3 breakout. And I know what you're thinking. Why do we have to keep looking for more confirmation? We're already bearish. It's because of how far we went today. This will typically result in a range down here, and we get a lot of head fakes and then back up into that range. So if we're going to keep going lower, prove it to me, bears. Prove it to me. I want to see a strong move down, hold that pullback, right, and run. If you can do that, I'm in, right? I'm in. I'll grab my new channel. I'll find that new channel, and we'll sell off that channel. My target on this now, right, if we get another strong leg lower here in the pre-market, my target, boy, all of a sudden now, right, that 2,900, which I assume is kind of where the bears have their big, mental targets right now. I assume that 2,900 is where they're trying to go. But keep in mind, that's a pretty big move here tomorrow, right? That's another 23 points lower. It's basically asking the market to do what it did today again tomorrow. It could happen, but it's the S&P we're talking about. This is not oil. This is not gold, right? It's a highly liquid market that probably is not going, and by the way, is just coming off all-time highs again. Probably not going to get back-to-back days like this. But hey, I could be wrong. I've been wrong before. You've got to be okay with being wrong. Don't trade what you think. Trade what you see, and you know what the plan looks like for tomorrow. Now all we need is to stay patient. Just remember, though, chances are we're going to sit here sideways for a bit. Up, failure, back down, or up, hold, and go. It should be a very active overnight session because of the market finishing towards its lows. I'm looking forward to seeing what tomorrow brings right along with all you guys as well. But the Nasdaq. Nasdaq is in a very similar situation right now. In fact, the only difference on the Nasdaq is they're already going sideways there for us, right? You can already see that now. So Nasdaq is pretty much kind of finishing off what I've already talked about here. It's a strong move down. It's not just a strong move. It's 1, 2, 3, 4 strong moves down, finishing right on top of that four-legged measured move. There's my trading range, right? The plan is pretty simple, right? We go up. The buyers, of course, they're going to try to buy that pullback. We look for those buyers to try and fail and sell back down. Or maybe we see a shallow pullback here, right? It's a 1, 2, 3. Draw that trend line up, right? Remember, look for some daylight in between and sell off that trend line. Or maybe it's a strong move up, a pullback to the moving average, a jump off the moving average. Where are they trying to go? Back up to the middle of that range at 7,700. At that point, we mark up that high, find that low, and we're trying to buy right off of that low. Or if we see that strong move up and they really jump off of that moving average, right, it's going to be, what was it called again? The 2-try breakout, the 1, the 2, the trap and go. Right? Give those bears a shot. Try once, try twice. What's really happening is buyers take their profit, sellers try to sell it, and buyers who are smart are waiting down there. And if you really get lucky, this might line up right with the low of that channel, and we might get a double dip on that, get that 2-try failure or that 2-try pullback, that 2-try breakout into that hidden channel pullback. That would be ideal going higher here for tomorrow. As we go lower here, right? As we go lower again, strong move down, crown reversal. 1 try for the bears, 2 try for the bears, trap, right, and go, right? Remember that trend line coming over will act as bear repellent, get just below the trend line, and then strong signal candle right back up into that trading range. Leave your runner for a pendulum swing. Right? Trading range, the amount of the move below the range, the amount of move above the range, right? Leave that runner, right, for that pendulum swing. Obviously, we'll know more about that once we get there. Or it's going to be a 1, 2, 3 breakout, mark up that low, off that high, and we're selling off of that high. Remember, though, you've got to see a lot of strength here coming off of that low. And then where would they be trying to go from here, right? Where would this Nasdaq be trying to make that next leg lower to? It looks like this range down here is probably where they're going to settle in here, right around that 7,500. This is, again, a little bit of, this is a big bite to chew here for tomorrow, though, right? That would require us to, again, pretty much do equal to what they did today. Probably not going to happen tomorrow. What's likely, though, is we go sideways here in the short term, pull back in the medium term, and then how the market responds to that pullback will very much tell us what to do next. And again, I'm just drawing on the charts right now. I have hundreds of chart lessons, real examples directly from our trade room as part of that free trading class. So definitely, if you like the money in your account and you want to make it more in there, you want to grow that account, I would highly recommend grab that free trading class. It's priced right. It'll give you access to our free courses, right? Our free pass to our trade room, hundreds of, right, real examples directly from our trade room regarding those setups that we talk about here on this nightly newsletter. So Nasdaq and the S&P are very, very similar here for tomorrow. And of course, last but not least here on the metals here tonight, right, is over on the gold. What's gold up to right now? It's still in my thunder is what it's doing right now. All right, hopefully gold won't take too much of my plan away from me before I get a chance to explain it here to you guys. But the bottom line is the gold right now, strong move up, right, into a trading range. This is not your typical range, right? It's a triangle. That triangle does have a rectangle inside of it. I like to use rectangles anytime I can find a rectangle. I always like to use the rectangles because the rectangles, obviously, right, they give me the best levels of support below us here. So we definitely know we have a bull market. We know we have a range. Okay, that tells us we want to buy low. I want to sell high. Anytime I see a range-bound market like this, I want to buy low. I want to sell high. And I know I have, right, a bull momentum on this, so I know the market's going to want to buy this thing going back into that range. But look at this thing, right? Look at that strong move down right there. Anytime we see a strong move in one direction, what do we usually get? We usually get another leg. So strong move down, we have to respect that second leg here for the bears. And ultimately, I need to wait for that second leg and then look for my chance to buy going up basically after we get those bears a shot at it. So again, bull market into a range. I want to be a buyer off of this low. But with that strong move down, I have to anticipate those bears are going to try again before I can confidently here be a buyer. So that's really what I'm doing right now is what I'm really up to here tonight is putting together the plan for how do we buy this right now. Because as you can see, the no trade zone, it's just a few inches overhead here. I don't want to trade inside the range. You know, that's always a real important thing to remember is that when it comes to a range, you want to buy below the range. You want to sell above the range, right? I want to buy below the range. I want to sell above the range. I don't want to trade inside the range because this gets really sloppy in there and there isn't a lot of room for profit, so people reject the idea of buying inside that range. So I want to be a buyer, right? I expect these sellers will try to sell again. And let's zoom in on this because you might recognize this pattern from earlier on in tonight's video. What does that look like right there? That's a spike in channel. Yes. So spike in channel pattern in the short term. What does a spike in channel pattern tell me? You got it. It tells me find the deepest part of that pullback. First pullback there, right? Wait for that pullback, that failure, and that buy. So what we learned earlier on the oil, right? Oil potentially had a shot higher, maybe into a spike in channel. That same basic strategy now applies to the gold. With gold, it actually makes sense too because you got that big strong move down. You know those bears are going to probably try again. And so ultimately what I'm looking for is I'm looking for a pullback. I'm looking for the sellers to try to sell this pullback as well. And that will give me a chance now to buy into their stops and then buy the pullback on the way higher. That's the basic idea of what I'm looking for right now. So as this market now rolls lower here, imagine now that moving average comes over. The bears now try to sell off of it. What do? We buy into those failures, right? We buy into their stops, right? If those sellers, if they try to sell off that moving average, where's their stop going to be? Their stop is right above that high. And what happens when you get stopped out as a seller? If you're a seller and you get stopped out, what happens? You by definition, you've got to buy your way out. So in all reality, those are not stops in my eyes. Those are buy orders sitting right there. Now you see why failure patterns work so well. Okay, so we know the sellers are going to probably try to sell this next pullback. I want to buy into their failure. And then remember, don't chase after it as it goes higher because you don't want to trade inside the range, right? So get that moving average coming over, buy that pullback, and in from there. That is a failure into a pullback, a failure pattern into a pullback pattern, right, as we go back up into that range. And you'll also notice too, I'm marking up this high. I've got the spike in channel, but I'm also kind of creating this little hidden channel down here, right, inside this little battle zone I've got drawn in. And again, that battle zone is nothing more than the exact same spike in channel, right, that we talked about earlier. That's all it is. So I'm marking up those highs. That's creating this hidden channel. This would be great. One try, two try, get that moving average coming over. Let those bears try to sell into that rising support. Let them try to sell, right, that move lower. Again, respect the momentum of this market, and then we go up from there. Now, I know what you're thinking. Well, what if it makes a run lower here? If it makes a run lower and retest this low, it all depends on where we go from there. Okay, for example, if we make a run lower here and we keep going lower, guess what? It's going to probably be a bear market at that point. That'll be a breakout, right? In fact, what you'd expect to see is you'd expect to see a 1, 2, 3 breakout. Mark up that low, mark up that low, mark up that high now, find that hidden channel, right? And we're selling off of that high. So if this thing runs lower, look for that hidden channel and sell off the high of that hidden channel. But don't be surprised if it keeps going lower and then bounces off of that low. Okay, that could easily happen here right now. Big strong move down doesn't guarantee a full move through. It may just come down, it may double bottom, and then we may get what? That crown, right? That crown. One try for the bears, two try for the bears. See how I use the same basic, it's the same basic patterns, except I use them as needed. You know, every successful trader has to have a toolbox full of different tools. You know, reminds me of being a kid. When I was a kid, I used to help my father, who was a handyman. You know, kind of a general contractor / handyman around town. And I mean, this guy worked 7 days a week. On the weekends, it was my job to help load the truck in the morning and clean up the job site in the afternoon. This is probably where I get my work ethic, right? Because this guy cracked the whip like nobody's business. But he used to always tell me, you got to bring the right tools to the job, right? You got to have the right tools for the right job. The problem is, if you try to use too many different tools, you won't get the job done right. It's all about having the right tools for the right job. You don't need a lot of tools. You just need to know the tools, right, that you're using. So as I see this market going lower, I know to expect that double bottom, that two try here, that second leg. From there, if we bounce off of that low now we know they're trying to go back into that range. The problem is it's very bearish at that point. Let them try once, let them try twice, and then buying up from there with that nested failure pattern. And again, you can see lots of examples of those patterns inside that free course that I mentioned earlier. Okay, so those are 3 scenarios there. One is that failure back up. The other is over and through, right? Find that new hidden channel. Last one, of course, is the bounce. 1, 2, let those bears try a couple times, and then we're buying into their failure, right? After they fail a couple times there. Now, what if this thing just shoots higher here? Okay, what's the plan if it shoots higher? If it shoots higher here, what you really got to look for is a trap pattern here, right? You got to find some trap. The goal will be, if the market just takes off going higher here, which could happen, it's gold we're talking about here, right? See how this is a trap low? So if this shoots higher here, buyers are buying low, right? That'll be a trap. If it runs up without pulling back here, now look for more traps as we go in. Okay, so if it just runs higher and we don't get the failure, we don't get that deep pullback, it's okay, it's not the end of the world. We just have to stay patient. I don't want to chase after as we go higher. I want to buy that pullback, buy that trap pattern, right? A trap setup is my go-to setup anytime I'm worried about buying too high. In this case, buying too high means we're buying back inside that range, right? That's what buying high in this case means. Okay, now what if we run higher here, right? What if this thing just runs back up? Can we sell it? Well, at that point now, it's going to be very, very bullish. How do we sell a bull market? very, very carefully. Zing. No, we use what? The crown reversal, right? The 1, the 2, and the back down, right? Let those buyers try to buy once. Let them try twice. You've got to respect that momentum. You don't want to try to pick a top, right, in those big, strong bull runs, especially since it's coming all the way off of that low. And again, if they run it up, hold that pullback and go, well, shoot, let's do it, right? Mark up that high, mark up that high, mark up that low. Let's buy that pullback, right? So don't be afraid of buying high if they confirm with that 1, 2, 3 breakout. Great stuff here on gold. Lots of different things happening here on gold right now. Looking forward to tomorrow's trading session. Next up, and now last but not least here on that euro. We talked about this last night, right, on the euro. You're in a big blast up into that narrow range. What did I warn you about last night on the newsletter? Stay away from the middle. Stay away from the middle, right? This is a great example of a failure setup that literally triggered right inside that range. And are we surprised it got kicked out? Yeah, I was definitely a bit surprised that it got kicked out that far, but I'm not surprised to see that failure fail, right? Because look where it is. It's right inside that no trade zone. That's exactly why you stay the heck away from the middle of ranges. And when you see a narrow range like this, it's always very challenging. So the euro is a little bit of the gold, but with one big difference, right? We know the market's a range. We know we have this strong move down, but you can easily see they haven't held it yet. You know, this could be really for, you know, there was a lot of news that kind of trickled in this afternoon. This could have been for any reason, really. It doesn't really matter why, but I would assume there was some news that came out regarding interest rates or the China trade talks. It doesn't matter really, but I'm assuming this has to do with Fed Powell this afternoon at 1 o'clock. Market, of course, right, tanks lower. The bears have to hold this, right? They have to hold this. If they don't hold it, it's going to go right back up into that range again. Okay, and of course, we do have to respect that strong move down. It is a very strong move. And anytime we see a strong move, we have to expect that second leg. Okay, so a little bit of this is the same idea for gold, but there's one big wrinkle, one big difference, the trend line. Really, at this point, you're going to use that trend line either to go up, over, and in, or we've got to wait for that now to go, get that back on here, wait for that now to finish the move, and then incorporate that now with the nested failure. Okay, so let's fast forward this now. It's a bull market. It's into a trading range. Range-bound market tells me buy low, sell high, avoid the middle. We know the bulls had momentum. We also know there are fundamental players involved right now, mainly the Federal Reserve Bank, right, and the ECB. This is one of those situations where it's not just the chart, right? We talked about oil, and we talked about how it was going to be a little bit less likely to get a good short off these highs right now. I know. Always the right pattern will tell us to do that. But again, with tensions in the Middle East right now, we know there's a fundamental player involved right now on oil. And a lot of times it's best to let the fundamentals kind of calm down a little bit before we try going against momentum. Right? Same thing is true here right now, right? The Fed has made it very clear, and traders are pretty much banking on the fact that they're gonna cut rates later on this year, and with cutting rates, that will be bad for the U.S. dollar. What is bad for the dollar is good for that euro, right? Is good for that euro by definition. Remember, the euro is 60% of the dollar index. If the dollar goes down, the euro, just by process of elimination, has to go higher, right? It's a fixed negative correlation there. So the reason why this euro is so darn bullish right now is because everyone's banking on the fact they're going to cut rates here in the U.S. Even with the low unemployment, even with the markets recently at all-time highs, according to Powell today, there are still going to be signs of overheating in this market, and they are expecting some recession recessionary procedures or pressures, right, in the next few months. The bottom line is they've been saying that for months now, and it's very difficult to call when those things will happen. The bottom line is we know these buyers want to go back up to retest the high. They haven't held that pullback yet to give us confidence to be a seller on this. The last time we saw a bear market here, right, was back, boy, almost 15 days ago, right? 2 weeks ago. So we definitely can see it's possible, right? It's possible. But the last time we saw a deep pullback like this, it took a couple tries and then right back up it went again. So we're anticipating a retest of that high here on this euro. The only problem we have right now is getting around this darn trend line. Right? This trend line is the big hurdle here right now. Now, we do have a strong move back up. Okay? And that strong move back up does give us potential here now. If we can get this run up, that pull back and that go, remember you want to see some kind of sunlight in there, right? You want to see some daylight in between the move up, the move back, and the nice strong signal coming off that trend line, right, for that buy going back higher. What I would anticipate happens, though, is we get that next leg lower, right? That next leg lower. So if we go lower here now is where we really got to be careful here, right? We got to get back above the high, back above that trend line. And what you really want to see here is you want to use that same nested failure pattern, right? Let those bears try once, let them try twice, and we're looking to use that trend line, right? Let them try once, let them try twice. If we do get that bounce off of that low, that gives us the opportunity now to grab that bottom with a nice low risk, high reward trade going back into that range. Now, again, target, of course, this point now is back up to retest those highs. Nice low risk, high reward trade. What if they make a run lower here? If they make a run lower, it's going to be quite obvious, right? They're going to go down, hold a pullback, and run. 1, 2, 3 breakout, basically, right? Mark up that low, mark up that low, up off that high, most likely. That will find our new channel, and we'll sell off that channel. Where's our target? We have to think that 14,000 target will be an easy target from there. But if you look closely at this, though, the meat and potatoes target for tomorrow is probably going to be down, right, in this neck of the woods right here. The last time we saw some sideways movement, right? If you were to look at volume profile, you would see most amount of volume, right? The high volume node is probably right around that, 13,700, 13,800. That would be the target, right, for those sellers if they get their 1, 2, 3, right? Look for that sell off of that high, right? And again, down to 14,000 should be relatively easy. I would imagine though 13,700, 13,750 is going to be your big target if those bears can really get this party rolling here. So again, I want to see us go up, over, and in. Stay away from that middle, right? And what happens if it jumps, right? If it just jumps. Let's say, for example, we run and then we go right up and go. Then what do? If it runs up, look for a trap. Right? If it makes a run, look for a trap. And how do you know it's making a run? You'll feel it, right? You'll feel it. It's real strong, right? You'll feel it. Shallow pullbacks. Mark up that shallow pullback area and wait for a trap off that low. It may not come all the way back to that trend line, but as long as you get a trap low there, that'll give you enough to buy low, stay away from that middle, and then up from there. And guys, don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to break all this down together like we do every morning. The strategy overall is pretty simple. Buy low, sell high, look for counter trend traders to get stuck, and buy or sell right into their exits, right? Because that's where you get the fast money in the shortest period of time and the most reliable setups. The strategy is pretty easy. What's not so easy is applying it in the heat of the moment. And that's why we get together every morning in our trade room, bright and early. We go over the patterns, we go over all the rules, and we execute the plan together. I want to see you there tomorrow with me. We do it every morning, Monday through Friday. If you want to get registered, just grab that advanced course. The advanced course includes our beginner, intermediate and advanced classes. It's all inclusive. It's a lifetime membership, so you get unlimited access to everything we do, our video classes, our daily training sessions, our ongoing support. I'll even remotely connect to your computer and install all the software for you. To learn more details, use that advanced course button right below the video tonight, or feel free to pick up the phone and call me in the office. I'm always here. I'll be happy to answer the call, answer all your questions, give you the information you need. You can get the right computer, the right account, the right software, and that way you're ready to go with me tomorrow morning at the opening bell. If you're not ready yet to become a member, that's perfectly fine as well. I have a great free trial here at School of Trade. Everybody really loves these free classes we give here at SOT. As part of that free trial, you'll get access to our free trading classes, our free pass to our trade room. Everyone loves that. And of course, hundreds of hours of real chart examples of all of our favorite patterns we find every morning together in our trade room. So whatever option fits best for you, call me in the office if you have questions, jump in as a brand new advanced member, and I'll see you tomorrow morning at the opening bell, or grab that free trial and I'll see you in the trade room on that free pass. In the meantime though, get some rest. Enjoy the rest of your evening. Share this video with a friend, and we'll come back and do it again tomorrow morning. If we don't see you guys tomorrow morning at the opening bell, come back and see us again tomorrow night. Same time, same place, 8 o'clock Eastern time or earlier. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.